looking again at the Procter and Gamble financial statements, the next question we want to ask ourselves is how much did P&G, Procter and Gamble, pay for inventory? Okay, so that's the question we're looking to answer. Now, what do we know from looking at the financial statements? Well, we know how much inventory they have on their books. Okay, so we know how much inventory they have on their books. And at the beginning of the year, they had an amount, they had 8, again, that's a debit balance, 8416. And at the end of the year, they had 6880. Okay, but that's not all the story. All inventory, if we make the assumption all inventory is purchased on it with accounts payable, we also have to look at the accounts payable account. And when we look at that, we know that the beginning balance in accounts payable is 6775, and the ending balance is 5980. Okay, so we know these two pieces. We know that they have less inventory at the end of the year, and it appears from looking at the accounts payable that they paid some of it off. But there's one piece that's still missing, and that is the cost of goods sold piece, because this is actually the costs of the goods that were sold. And looking at the income statement, I can pull the number off here, and I know that cost of goods sold is $38,898. Okay, and what are we looking for as an answer? Well, we're looking for cash. So if you think back to the last video where we looked at how much cash was received from customers, we had a very similar setup. We had the income statement here on the left-hand side of the screen. We had a balance sheet account in the middle, and we had a cash account on the right. We put the beginning ending balances in our balance sheet account. And again, keep in mind, this is where students tend to make mistakes. Inventory is an asset, and it's a debit balance. Accounts payable is a liability, and it is a credit balance. Okay, so once we put this number in here, then we can start to work our way across. Well, we put this number in cost of goods sold. Cost of goods sold is a debit balance. We need to match it with a credit, and so we're going to put $38,898 here. Okay, so this number comes all the way over and goes right here. Okay, then the question is, what number X makes this balance? Well, 8416, the 1 in there, plus an X minus a 38898 equals 6880. Solve for X, and I can tell you that X equals 37,362. And I'm always going to double check my work here. So if I add up the 6 and the 2, that's 8. Well, that's 0, right? So the 1 and the 6 is 7 minus the 9, that's 8. So yeah, I start to just do a rough calculation and estimate, and it balances. Okay, so I've got a debit on my cost of goods sold, got my credit on my inventory. So now I've debited inventory to make this balance, and I need a credit in accounts payable, right? So that has to run right over here. So I put my 37362. Okay, and then some number y right here gets this to balance. And so my question is, there's some number 6775 plus 37362 minus some number y will equal 5980. Solve for y, and y ends up being 38,157. and everything checks out. That number then comes over here. That's a debit, so I need a credit to make everything balance out, 38157. And so my answer to this question is, how much did P&G pay for inventory? 38157. Now, if I want to do a little bit of extra right here to show you how this is. Let me erase some of the work down here so we can show some journal entries to see how this would map out, right? To kind of finish the process. Okay, so if we want to show a couple journal entries, well, what journal entries does this imply? Well, it implies that we had a cost of goods sold for 38898 and inventory. Well, this is the journal entry when we sell inventory, or we move inventory out and it's sold, which just implies this first journal entry right up here, right? Then we have this journal entry, and what does that imply? Well, that implies a journal entry of inventory of 37362 of a debit, and a credit of accounts payable of 37362. What do we know about this journal entry? Well, this is the journal entry you would make if you bought inventory on account. So that is this journal entry right here. Okay? Right there. And then the very last journal entry right here, we're going to debit accounts payable. I'm going to abbreviate that because I'm running out of room. 38157. Get my 1 in there. 157. And cash. And this journal entry applies that we paid for the inventory that we purchased. So that's that, and that's that inventory right there. Okay. So and then we have a little bunny face if we want to. Look, perfect bunny face. So this is the way we would go about to find out how much cash we paid for inventory.